Right then, so this is the last in the video series, the mini series. My pina colada's come to an end. It wasn't really pina colada, just a nice cordial. I didn't want to get sloshed while recording the entire video series, so we call this video series Landlords Don't Worry Be Happy, because we were starting to get lots of, well, we noticed we got lots of landlords worried about all sorts of stuff, and we were generally sat there perplexed. Like, these things are not things to worry about. They're in the media, they'd want you to worry about them. There's headlines that are worrisome, but if you dig deeper, there's nothing to worry about here. In actual fact, some of this stuff, there's good opportunity here. So today I want to talk about the market in 2022 and 2023. What I think it do. We've talked about all these things. There's some good opportunities here, or there's some turbulence. Almost what we learned from the turbulence that happened after 2008, the credit crunch. What happened? We have been through this. I've personally been through this kind of turbulent period. I can see the patterns happening twice. There was kind of a little one as well, maybe 2.5 times, but I can see how to play it. I'm not going to try any macroeconomic prediction. I'm just not smart enough for that. I'm keeping it simple. I'm keeping it realistic. I'm keeping it to a plan that I think that I can deliver, and I think that you would be able to copy or get on board with as a client, and we'll copy it for you. I don't think it's relevant to start looking at all the macroeconomic stuff, and some people might slate me for that. I just know, back in 2008, one of the big lessons I learned was you get two really smart people on TV. And if you took one of them and another one separately and looked at their credentials and listened to what they were saying, it all sounded really, really sensible and clever. And the problem was they were talking about one of them had to be wrong. I believe him, I don't believe him, but they're talking about completely opposite things, and one of them's got to be wrong. So it doesn't matter about how smart you sound. You've got to have a plan that's workable. Let me put it a different way. You need to invest in a way that works up, down or sideways, and we found that way. I'll explain how in a moment. First I want to ask you a question. I ask it myself all the time. It grounds me. Why property? What else are you going to do? Ask yourself the question. If it wasn't property, what else would you do? If you're a landlord and things aren't going so well, or as well as you'd hoped, let's say, if you're thinking, is this worth it? You've got to ask yourself the question. Okay, let's think of property as a fruit tree. I've used that analogy in the rest of the video series. Is it better to harvest a tree or chop it down? Selling the property is the same as chopping it down, yeah. And for sure, you get paid for the wood. But if you did chop it down and you got the money for selling the wood in this analogy, yeah, where would you put the money? If you take a proper look. One of the videos here talked about getting your accounts in order. So you've got your profit and loss every month coming through on a report. You've got your balance sheet. You want everything. You want to know where you are. No guesses. The amount of times I've seen a landlord come in to me and they're complaining that I'm not making enough profit, and they get, oh, show me. They get literally an envelope out and start writing it down. I said, no, show me your accounts. Oh, I haven't got any. They'll get it done at the end of the year. So, well, we can't have this conversation then. It's impossible. So get that right, and then analyse your gains. And you tell me, where on earth on the planet of Earth can you get better returns than property? Because I can't find anywhere. Particularly if you bought well, buy the right house in the right area for the right price. So you got better than average capital appreciation. You need to include that in your numbers as well. Particularly if you leverage. Leveraging boosts your yield. If you're looking at, don't look at the value of the property versus what you're bringing in. Look at your capital employed versus what you've left, what you're getting. Property is the only investment on planet Earth that goes up in value, brings in an income, rent, and that you can leverage. Don't forget that. That is absolutely massive. There's loads of other benefits as well. Running a property inside a limited company is very tax efficient. You can pass it on to your heirs very easily. Inheritance tax planning's simple. We talked about this in some of the other videos, haven't we? So all these things that they look like hassle, they feel like hassle, but everything's hassle if you look at it that way, isn't it? Getting it sorted will reap dividends, so you should get it sorted. So really, your only option would be to put the money you chop the trees, to put it back into more trees, wouldn't it? Isn't it better to get I'm probably stretching the analogy here a little bit, but isn't it better to get the orchard healthy and productive and harvest the fruit every year? whilst watching the trees grow too. Maybe that isn't stretching the analogy, maybe it's a good one, you know. That's what this video series is really about. It's about building a profitable, stable property portfolio and learning how to do things properly. Don't worry, be happy translates as every problem's got a solution. You just need to find it, and none of this is overly complicated. Don't worry about it, just find the solution. There are definitely some things that you'll need to fix. In my property business, there's always something to fix or change, something to understand, to learn, change, whatever it is, you know. It's not hard. You just need to get grips with it, get on with it. We can help you with that. If you want some help, that's what we're here for. Book on a discovery call. There's a link in the description as usual. We have a chat every Wednesday, morning and afternoon, almost every Wednesday. Some weeks we skip them. We're having to do more recently, so I think soon we'll have to be doing every Wednesday. It's free, it's on Zoom, it's dead easy to attend. It's a couple of hours and you get to ask any question you want, or sit in the background while other people ask questions and you get to hear. And it's a great thing if you're not quite sure, or if you're really sure and you want to sort of confirm things. So book a discovery call. All of these things that you need to learn, fix, change, understand, we can discuss them on a discovery call. I think we can make light of almost every bit of hassle or problem. We've done it all before. We've got the team of people that just make this easy. So make it easy on yourself. So yeah, just ask what else are you going to do? For me, the answer is always property. That means that I just keep buying steadily, month on month, year on year. So if the first idea is, you know, just to never sell, the next question is when to buy, isn't it? You know, that's the other end of the bookend of the question. So the second thought I want to share is, it's a good job our strategy works in the market goes up, sideways or down, because you simply cannot time the market. Don't even try. You will almost always get it wrong. And I suppose one thing I'm going to come on to now, if you get it right, it's not that big a deal, to be absolutely honest. It's not worth trying to time it, is what I'm saying. I do see some landlords hesitating. They're looking at the financial outlook on the horizon. They're thinking, oh, I'm a bit worried, I'm not sure if there's turbulence. Yes, there definitely is. It's a great opportunity. You know, all this turbulence that happened in 2008, 9, 10, more millionaires were made in that turbulent period than all the stable period put together. I don't know quite exactly how true that is, but it's an off-quoting thing, isn't it? But you can definitely see it. I certainly know that I did. Lots of other landlords did. If I look at my own portfolio, the big chunk of it, the gains, came in 2008, 9, 10, 11 even, and that stands you up for good stead, you know. And that you know, you get this snowball effect and get it going. I guess that's the point I'm getting on to. It does seem sensible to sort of check yourself, wait, plan, try and understand the market. But what I'm saying is it's impossible to understand the market, so you need a different kind of strategy. You need to look at the turbulence and think, how do I figure out how to take the best advantage of that? Because it's a dangerous game, waiting. How long do you wait? Is it 5 years? Is it 2? Is it 6 years? You know, what is it? You know, 2, 3, 4, 5, 6 years, whatever it is. I've already said, if you try and time the market, you'll almost certainly get it wrong. So that means that you're playing an uncertain game. There's another game that you could potentially be playing which is more lucrative. You won't get it right anyway. Even if you get it spot on, you do time the market, and you only buy in the ups and then you stop buying in the downs. Well, a 5-year plan will become a 25-year plan, because you know you've got big gaps where you're doing stuff, and the opportunity cost of not doing stuff, you've got to work that out as well. So those that try and time the market, they simply, you know, they get scared, they don't do anything, and they buy less houses. So it's, so long as you have a long-term plan, buying more is always better. The big upside is just getting on and buying when you can, what you can and when you can, as much as you can right up front. The long-term benefit is clear, because you know you'll end up with one house which will become 2, and 2 will become 4, and 4 will become 8. And if you don't get on with that quickly, then you know the next leap, and I know it doesn't always happen like this, but 8 will become 16, 16 to 32, and it's not as big as that. But you know what I'm saying? Just to illustrate the point, that as it rolls up, your 6th year is bigger than your 5th year, your 7th year bigger still, 8th year bigger still. So you've got to get on now. Now here's another bit of news and a bit of a statistic, and I'm not going to put stats to it. Anybody can go online, go to the Office of National Statistics, go on Nationwide, do a good one. Nationwide, a building society. You can see the numbers for yourself. Property crashes happen for sure. Look at how severe they are. Overall, in the worst property crash, property prices reduced by single digits. And that's all properties. One bedroom flats and £1 million mansions. And actually those two extremes are quite affected by a downturn. You know, one bedroom flats and notoriously you get squashed in a downturn and pick up quickly afterwards. £1 million houses, affordability, you know, maybe it's £500,000. It depends what it is. But even in this particular cycle, what is £1 million now? It's probably, I think I read something recently that almost something like 80% of all properties in the home counties are in a particular subset area of distance. We're over that level. I can't remember exactly. But what I'm saying is, that includes all properties. So when we're looking at property price crashes, single digits, all properties, the likelihood of a 2 or 3 bed terraced semi detached family home in a gentrifying area in a satellite town next to a large northern city going down by that same amount is less. So I'm not like I sort of glossed over some figures there, and you know I'm not trying to dig into the absolutes. I'm trying to just paint broad brush pictures of highlighting what the risk is. You know, how bad can it get? And I don't think there's not really any such thing as a property crash. Prices reducing 2 to 5%. You know, even it's hardly a crash, is it? Even 10%. You know, a 10% slide. If that property makes money every single month, I'll hopefully, and so will you hopefully, refinance before a slide happens, so you actually haven't got much of your own capital at risk and you're making money all the way through, and you've got property number 2, 3, 4, and it starts to roll up and get that snowball effect. For me, that's it. So I can make money, buy properties when the market's going up, when it's going down, and when it's going sideways. I just keep buying. Thinking back to my first point, my previous point, and then point number 1, I suppose, chopping down the trees or harvesting. If you chop, where do you reinvest? Stocks and shares. In a recession, they really can crash. Gold, there's no income, no ability to buy them cheaply. You can't buy stocks or shares or gold for less than they're worth. There's no ability to mortgage. You're going to leave the cash in the bank, watch your inflation erode it away. And actually, that brings me on to my third point here, which is like a previous unadvertised third point, but I am going to try and avoid macroeconomic forecasting. I'm just not smart enough. I can't see property prices slipping in the next 2 to 5 years though. I just can't. We aren't building enough homes. There's loads of cheap money still in the economy. Employment's good. There's issues of inflation, but you know, if a brick and the timber to make the house is going up and up and up, why house prices coming down? You cannot build the houses that we buy for less than we're buying them for. So a house, I used to say 125 grand, I would imagine it's probably gone up by now in the last year or so, but you can't buy a house that we can buy for 60, 70, 80,000 pounds for much less than 125, you know. That's the backstop there, that's the ceiling, isn't it? And we're buying houses at 50, 60, 70, 80, all the way up to 150,000 pounds. We kind of top out of that, you know. £150,000 house, it's going to cost about that to build, and again that's that ceiling, isn't it? 150 grand will be a slightly bigger house. Isn't owning leveraged property, and let's, you know, talk about that, you know, you've got to work out what your own risk profile is for leveraged property. Isn't owning leveraged property the best hedge you can have in an inflationary market? The value of the thing you own is going up, the value of the thing you owe, the loan to the bank, is going down. So what we're really talking about, to summarise, is if you buy the right house in the right area for the right price, perhaps add some value through a renovation, make sure it yields well enough as well, all those things. All of those things you can control, unlike, you know, trying to dig into the macroeconomic picture. What can you control, what can you not? The kind of houses we look for are those higher yielding, sort of cheaper houses, houses under £200,000 end value, let's say that. Some of them are under £100,000. You can't build the house for that. Property prices going up, value of what you borrowed going down. Do you know what? I might be wrong, but I don't think I am. I'm refinancing everything that I've got at the moment. I'm pulling as much cash out as I can, and I'm just trying to buy 1 or 2 properties every single month, good ones in the right area, to the right model, and keep going and keep going. And that's not a new thing for me. I've been doing that for the last 20 years. If the property is right, it's always a good time to buy, and that's the main thing to take away. Don't try and time it. It's impossible. You'll get it wrong. The benefits of timing it aren't that big anyway. The risk of timing it wrong is not that great anyway. 5% drop, you can live with that if you bought the right house in the right area with the right price, and you do everything. It's the property you're buying that matters, because if you get on with it, you'll buy the first one, the second one, you'll just keep going. The people that hesitate, 10 years time, they'll have bought a handful. You'll have bought twice as many, 3 times as many. And don't forget, every time that snowball effect. I could now buy a couple of houses a month. 5 years ago, I'd have been lucky if I could buy a house a quarter, and before that, it was a house a year. Now, if anybody knows my story, it's a little bit different to that, because there was this crazy period called the same-day refinance. So that's not quite true right in the early days, but that's for different reasons, isn't it? If you know about that, then you know about that. So, I hope you enjoyed this little mini series. I had fun recording it this afternoon. I hope I helped some landlords see a different way of doing things. I hope I spoke to some of our existing landlords who bought houses, maybe 5 years ago, maybe 10 years ago, and they're looking around and thinking the environment's changed, it's unfriendly to landlords, I don't really want to do this anymore, and maybe I'll sell up. Look, if you really do want to sell up, come on to a discovery call and we'll talk through your options, because we might buy it ourselves. We might help you to relocate the tenant to another house, renovate the house to a tip-top condition and resell it on the open market to a first-time buyer, put it back into owner-occupied stock. It's the best idea to sell a property at the top of its game for the top price. If we buy it, we can buy it with a tenant, and of course there's a cost in there. I mean, if we buy a house, we'd always want a bit of a deal, of course. But if we're taking it with a tenant from day one and it's in reasonable order, then it doesn't need to be so much of a deal, does it? Because you don't have to take the void into account. So there's always options. But what I'd rather do is persuade you that being a landlord is the best wealth creation strategy on planet Earth. Not to worry, be happy. Let's fix anything that you think's an issue. Talk through anything that you think might end up not being an issue. Fix anything that really is an issue. Get on with it, and then maybe in the next years after that, after we've got you on the right footing, maybe you can buy some more and start to grow. So there we go. Next steps for you, if you're sort of wanting to take some next steps and find out more, book on a discovery call. Go to the description in the video. There'll be a link there. You can book on a discovery call. I'm on them every Wednesday, almost every Wednesday. There's a couple of Wednesdays that sort of skip the gap, but most Wednesdays there's a Zoom call in the morning and the afternoon. They're free, they're easy to attend. Follow the link, go to the website, and you can click and book yourself on it. It's done in about 30 seconds as the Zoom link comes through. It's your opportunity to chat through any of these subjects in the mini-series. Don't forget to subscribe, hit the bell. I'm starting to record more of these videos now. If you look back on the channel, there was a sweet spot of just before COVID. We were recording one of these every week and putting them out, and I really enjoyed doing it. We're building a YouTube studio now, so it's going to get more and more. That'll be here, and the next sort of 4 months it'll be built. And we've definitely not done as much of this. We did it on purpose. These videos generate a lot of interest and new business for us. I do them because I like doing them. I think they're useful. It's not the main point that there's new business, but undoubtedly people come on discovery calls and become our clients. Landlords come to us. We couldn't keep pace with it as we were building our system and process to onboard landlords with 10, 20, 30 properties, or 1 or 2. Don't be put off. You don't have to bring a huge portfolio over. If you've only got 1 or 2 houses, we will take them on, and we'll have exactly the same conversations as if you've got 100 houses. So we put a thing in place now where we can bring on a property portfolio pretty much, the most of the middle bit of the country. We go all the way up to northeast, Newcastle, Tyne Tees, South Shields, all those areas, all the way over to Liverpool and Manchester, down to as far as Northampton and across to Stoke and those sort of areas, and a little bit further over west as well. So anyway, if you've got properties in any of those areas, we'll gladly take them on. And the other thing is, of course, finding properties to buy, find, fix and rent. Handhold, our service. You go on our website, look at Handhold as a service. If you're looking to build a property portfolio, we'll do that for you. And doing these videos generates those leads, and we had to turn that off during COVID because we simply couldn't find enough properties, and that's changed as of three months or so ago. The volumes come in there. Like I say, it doesn't matter whether the market's going up or down or sideways. It's the right house, and you only get to see and find the right house when people are selling, when the volume's coming through. You've got to lift every stone, have a look underneath. Most of them aren't any good. Most of them we can't buy, but the ones we can are few and far between. We probably need to see 100 houses to find one that we can buy. And if there's only 100 on the market every month, you can only buy one. Now there's thousands, then we can buy tens. That's the way it works. So hope that was useful. Book on a discovery call. Hopefully I will see some of you watching this in real life on a discovery call very soon. Hopefully it was useful for you. I enjoyed it this afternoon. Bye for now.